Good day, everyone. Welcome to today's episode of Market Views. Today, I'm joined with Tawonga and Zenzi.
Thank you.
Thank you.
This week, we have received financial statements coming from Old Mutual and First Capital Bank. So, just to start off, I'm going to ask Tawonga, what is your take from the financial statements you got from First Capital, and just a general overview?
Thank you for that. So First Capital Bank, it had fairly good results comparing with the period that we've had in 2021. So first of all, they had a growth in profit in historical terms of about 183% to about $4 billion. Then taking note of the major contributor to revenue was its retail division, which contributed about 38%. However, this was boosted from the non-funded revenue, which contributed about 42%, whilst the interest income was the remainder. And also, it has an EPS of about 228 cents, which led it to declare a dividend of about 43 cents. And the bank has a dividend payout ratio of about 38%, which is fairly good considering its sector as well as the overall market. So I would say that First Capital is looking very bullish. Also, they have a loans to deposit ratio of about 44%, which puts it in a very safe space in terms of its assets, because it has a lot of Zim dollar contracts which will hedge it against inflation.
All right. Thank you. Moving on, I'm going to talk to Zenzi, and he's going to tell us about the Old Mutual Investment, the Old Mutual Group, from their financial statements, what's in it, and just a general overview of the statement.
Thank you. Eugene. So I'll start by mentioning the sector P of the direct competitor of First Capital Bank, which Taung was mentioning of CABS. Notably in CABS, we saw that the loan book increased, especially in terms of the real money that they're lending out. The 60% of the loan book is now a US dollar, which speaks more to that to how the banks are now positioning in terms of their strategy. They're now after looking into ways of doing core business activity via their real US dollar lending, which that they're doing in the market. But yeah, overall, CABS was doing very well. It also got a line of credit from Afri-Exim Bank, and with other bank correspondents bank that they are giving out lines. So it actually speaks that the economy is actually coming from the low base, and the business is actually improving. Also, moreover, in terms of the overall group contribution, our CABS contributed in the 2020 financial statement contributed 9%, but in the prior year it now contributed about 25%, which has been a very significant things happening from that bank.
All right. Then, apart from CABS, Old Mutual Investment, Asset Management, do you have anything to highlight from those ones?
Yeah, well, from the investment bank, well, so from Old Mutual, we see that now currently as a strategy, it's now trying to tap into informal markets where we have seen them trying to push the microservice business. Also notably, it also said that it's now becoming a very much player in the funeral space, where Nyarads and Moonlight have been dominating, Doves have been dominating that space.
Yes.
We are looking into second quarter opening a new branch in Harare for the second parlor, which they're intending to open. They're still yet in the testing mode, but yeah, there are times when you know that a big player is coming. When you hear that Manchester United signed Cristiano Ronaldo,
Yes.
you know that big things are going to happen. So with that move, I'm sure it's going to be a tooth and nail competition, especially in the funeral service sector. It also interestingly, they also said that in the alternative investment space, last year they invested 28 million US dollars in that space, and they're going to the future. They're actually expecting that business to contribute 10 to 14. So it speaks now in terms of everyone is actually now trying to find ways of doing business that exports other business that is generating real foreign currency earnings, which I'm sure that's the strategy which they're now positioning themselves for 2022 into 2023.
Right. Thank you, Zinzi. I think just before I move back to Tawanga, what's your general overview of the company Old Mutual, maybe the industry as well, mainly focusing on cabs and other investment and financial.
Yeah, so from Old Mutual, you actually realize that it's actually doing very well. Especially, you can actually see other numbers, which the Old Mutual property, it has 86 occupants. I was reading the last time when analyst is complaining that they are building, most of their buildings, they have 20, they have 40 to 50% occupant. So it speaks more into saying that the Old Mutual team, they are very expertise and they are one of the leaders in the competition. Also, as we realize when we're talking of Old Mutual, it tends to be the land of first resort of many borrowers who are doing these renewable projects which have been happening. The solar project, which is the one that was recently commissioned in Victoria, in the gas solar that was recently commissioned. It's the Old Mutual is just underwriting that. So with the pressure that's coming in, as just last week, the government said that they're cancelling IPPs that are not going to take any action. 97 IPPs which are going to be affected. So I think that Old Mutual is going to be one of the key players in that, in especially in terms of financing, since it's also the big asset manager. And yeah.
Right. Thank you, Zen. Coming back to it, Tawanga, can you just give us a general overview of the economy and the market regarding maybe on the banks and maybe on the investment side?
Okay, thank you. We have noticed that from the latest Zimsted figures, inflation is starting to heat up again, with 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 an extra 2.3 or so inflation at the month on month for February. So what we would expect is that there is probably going to be less growth due to supply disruptions that we have been noticing abroad, as well as in the form of higher prices on the goods that we are now importing. So the combination of this, it means that we're going to be having more than normal as to inflation. We would expect also lower growth. But coming on to just to highlight further, maybe on FCB, you'd notice that it is amongst one of the banks that has met its capital requirements, exceeding the capital requirement of about $30 million in US dollar terms. It now stands at about $75 million. So bringing its capital adequacy ratio to about 37%, which is really exceptional. Then also, if you would note, its price to book value is about 4.8 in inflation adjusted figures, then about 4.7, comparing with its current price of about 4.5 on average, just $4 in the few weeks that we have noticed. I think we can be bullish, and it is a counter that you can maybe stock for the long run, because I think comparing with its sector peers, it is doing very well, as it has also outlined that it is going to be investing to the tune of about 10 million in real estate, which is considered also one of the safe assets in Zimbabwe. So I think going forward, or for the market is likely going to be bullish, because we're going to be experiencing more liquidity flows through government as it funds its projects. Although the RBZ will be carrying out its liquidity mopping up exercise, I think the overall effect is that the money being churned out by the government will outweigh that which is being taken out by the RBZ. So I think and the bulk of this money, we will see it funneling onto the market, which will be very bullish, I think.
All right. Thank you, guys. Thank you, everyone, for joining us this week. See you again next time for Market Views. Please like and share our videos, and see you next time.